Good evening. This is the Elliott wave update for the S&P 500 for Thursday, June 30th, 2022. I apologize for being a little bit on the late side tonight. I had some prior commitments that actually kept me away longer than I had anticipated. But nonetheless, let's dive into what the markets did today and how that affects the counts and what it looks like going forward. Again, on the daily chart, there's not a lot to be adding, but I can fill in a few blanks and just not really necessarily make stronger adjustments, but make clear what the possibilities are that could take place tomorrow. So we continue to look at this as an intermediate ABC. I did switch back to that. It is now and will remain my preferred count. So still looking for that more serious C wave to unfold, to continue unfolding, I should say, as this continues to look as if it has a strong possibility of being a minor one. If that's the case, we are going to drop very severely once we're done with minor two. We have one other possibility here, but it basically still fits, and I'm going to keep it on the outside, and that would be that we get a drop from here down to that 3,500 level. 3,500 to 3,480. It is back there in the counts, but it has not been disqualified just yet. So it counts better that this is working out to be a 5-wave decline from here of minute level, finishing a minor one of an intermediate wave C. That intermediate wave C will consist of 5 waves of minor degree. So we may be just in the beginning stages. What I'm going to do is drop down to that hourly chart so that I can fill in the blanks. What is still, before I do that, what is still left here is the Fibonacci retracements for a second wave, for a minor wave 2. And so I've left them there for a very specific reason, because we still have to give credence. We still have to consider that the market, just for whatever reason, again, so I'm making something based on the technical picture, with what the Fibonacci picture, what they continue to show. It likely has nothing to do with reality, what is happening in reality in terms of inflation, interest rates, et cetera, et cetera. All of that is real. What the market may do is just this one-off thing, which is totally going to be controlled by where things are going to expire tomorrow. So where positions go on and which stocks will actually be affected the greatest by that. The one that really continues to really wrap itself around what happens within the NASDAQ and to a larger extent, the S&P, is Apple. Apple continues to carry a very heavy weight in both. So when Apple decides that it wants to go down, these indexes will drop. When Apple decides it wants to go up, these indexes go with. And it balances out other components that if they join the party and go up, then the market gains speed. Now I'm going to add to all of this that tomorrow is an expiration, and Apple continues to have strikes every dollar. So when the stock is moving $2, $3, $4, $5 intraday, it is zipping up or down past many strike prices. And those strike prices have delta and gamma with positions. So we get what they call a gamma squeeze, and that can happen in both directions. You can get a gamma squeeze if it goes up, you can get a gamma squeeze if it goes down, because it's going through strike prices. And that produces a lot of gyrations within the indexes, because every time it ticks, it carries, again, a higher percentage of the weighting and what happens point-wise in the S&P and in the NASDAQ. So based on that, they decide that they're going to push higher and they're going to push it up. It will take other stocks with it. If the market starts to move up, we would need to see it to turn and just go, and I mean go, back above 3,800, back above 3,830, 73, heading up towards 4,000. And this would then only be the C wave within the minor wave 2. And what are the capabilities? I'm not saying tomorrow, and I'm not actually saying they're going to happen. I'm saying, should the market turn tail and run, this is likely what it would be. And this is what I would expect it to do. That's all I'm saying. And if the upside kicks in, tomorrow being an expiration, tomorrow likely being thinner with an expiration. So when you need to buy a larger amount of something or sell a larger amount of something, the same number of people that are going to be there to trade with you may have already taken the day off. So again, situation, you look at the scenario. I am not trying to pass judgment. I am not going to tell you it's like, well, it's bullish, it's bearish, and this is why. I don't care, to be honest with you. Not when I'm day trading. Do I care about our economy? Sure, I'm a part of it. I live here. So yes, I suffer through the same thing everybody else does, because yet I get in and I have to put gas in my car and I have to go buy food, et cetera, et cetera. So it's like, yeah. Anyway, that's the upside. Down to the day, the hourly chart, and we're taking a little peek at what could possibly be going on one level down. Right now, this does appear to be just an ABC down, right to here. A, B, C. And if that's the case, it could be wave B. Again, for an upside scenario, this would be minute A, this would be minute B, and this is a 1, a 2, and we do go and go and go. But that's what I would need to see if that's going to be the case. If it just takes a jaunt and goes a little bit and comes back down and goes anywhere below these levels, I'm not going to, I think that deal's off. And this is just a little wave 4, and then we're going to come down to a 5, and that puts 5 in from here, which then spells the third coming down. So, and if that's the case, we're going to break. First of all, this support got close. 37.35, I think it was 41 was the low today. So that's going to remain support. Then we have support at 36.93. That's the bottom of the B wave. So that if this, which I don't know if it would be considered, or I would consider it still a B wave with that larger C wave, but we'll see should it happen. In any case, what is more important is that if it breaks this, that opens up the door for 36.39, and then we are on our way to 3,500. 35.50, 35.35, 3,500, 34.80. That's the mix down there. And it likely can do it pretty quickly. So that's the story. I'm going to stick to it for right now. Just be ready. Play the price action. Don't go looking for what's bullish or bearish. It's not really going to matter, because anything that happens in any of the component stocks and any of the overlaps between the NASDAQ and the S&P, you're going to see it in the price action. You're going to see it break the moving averages, and then you will know the story. And so you play it accordingly. If it breaks above the 50, which also is exactly where, and this is on the hourly chart, we have the 50 EMA and we have the 200 SMA touching, 3808 touching. 3808 right now is very strong resistance on the hourly chart, strong resistance. If they break through it, we're likely going to go right to that 200 EMA at 38.25, 38.26, and then we got 38.30 right behind it. So we do have pockets of resistance on the way back up. So the path of least resistance and support at this moment is the downside. So a downside move may be more free flow. And if that's the case, then what I look at that as, the market's dropping back into trend. Right now, I still consider the trend to be down. This is a counter trend move. So the upside move is counter trend. The trend is down and it flows freer. Okay, leaving it right there. As I said on the NASDAQ update, I actually am now going to make a promise that I will get those big picture updates on which are going into more detail, starting going up to the weekly and the max monthly. So we're looking at the very big picture to see how all of this is fitting into that. And our next update outside of those will be on Monday, July the 4th.